Linda still remembers the exact moment everything began to fall apart. Not the day, not the year, the exact moment. It was a quiet Tuesday afternoon. Nothing dramatic, nothing unusual, just an ordinary day. The kind of peaceful afternoon she had grown used to. She was standing in her kitchen, a cup of coffee in one hand, her phone in the other. Sunlight came through the window. The house was silent. Her husband had passed away 5 years earlier. Her son had moved across town. Most afternoons were calm, predictable, comfortable. Linda liked it that way. After decades of working and raising a family, life had finally become stable. Bills were under control. Savings were growing. Retirement was only a few years away. And most importantly, her credit history was nearly perfect. For more than 30 years, Linda had been extremely careful with money. She never spent more than she could afford. Credit cards were paid in full every month. Loans were handled responsibly. She understood something many people ignore. Credit is fragile. It takes years to build, but it can be damaged in weeks. And Linda had spent decades protecting hers. Carefully, patiently, responsibly. But even the most careful people can make one decision that quietly changes everything. And on that Tuesday afternoon, the phone rang. Unknown number. Linda almost ignored it. She usually did. But something made her answer. Maybe curiosity. Maybe instinct. Maybe just habit. She tapped the green button. Hello. The voice on the other end sounded calm, professional, almost routine. Good afternoon, ma'am. This is Amanda calling from the loan servicing department. Linda frowned slightly. Loan servicing department? That sounded strange. She didn't have any active loans. Her mortgage had been paid off years earlier. Her car was fully paid. She carried no personal debt. So she asked politely, I'm sorry, what is this regarding? The woman continued speaking. Still calm. Still professional. We're calling regarding a missed payment. Linda felt a small knot in her stomach. Missed payment? That didn't make sense. She didn't miss payments. Not ever. She checked her accounts regularly. Sometimes even obsessively. So she asked the obvious question. What payment are you talking about? There was a pause. Then the woman replied. The auto loan for $32,000. Linda blinked. $32,000? Auto loan? Her car had been paid off 2 years earlier. She clearly remembered the final payment. She had even celebrated that moment. So she answered slowly. I think there must be a mistake. But the woman responded immediately. Ma'am, you are listed as the co-signer. And suddenly, Linda remembered the moment that started everything. The moment she believed she was simply helping her son. The moment she signed a document that quietly tied her financial future to someone else's decisions. 3 years earlier, her phone rang late one evening. It was her son Michael. His voice sounded different, excited, but also nervous. Mom, I got the job. Linda smiled immediately. Michael had been searching for months. After graduating college, the job market had been harder than expected. Applications, interviews, rejections, endless waiting. So hearing those words felt like relief. That's wonderful, she said. Michael continued explaining. The job paid well, better than anything he had been offered before. It was the opportunity he had been hoping for. But there was one problem. The office was across town. Public transportation didn't reach the area. Without a car, he wouldn't be able to keep the job. At first, Linda assumed the solution would be simple. Michael could buy a used car or lease something inexpensive. But then Michael said something that changed the conversation. I tried to get a loan. The bank said no. Linda felt surprised. Michael had always been responsible. But the bank had explained something. His credit history was still young. Student loans were already on his record. There had been a few late payments years earlier. Nothing terrible, but not strong enough for a large auto loan. Then Michael asked a question many parents eventually hear. Mom, would you be willing to co-sign? Linda didn't answer immediately. She loved her son. Of course she did. But she had heard stories. Friends who had co-signed loans. Parents who had helped family members. And later regretted it. Financial advisors often warn about co-signing. Because when you co-sign, you are taking real legal responsibility. Not symbolic responsibility. Real responsibility. But Michael sounded sincere. Responsible. Confident. I'll make every payment. You won't have to worry about anything. And in that moment, Linda believed him. The following week they visited the dealership together. The showroom was bright. Shiny cars lined the floor. Salespeople moved quickly between customers. Everything felt fast, exciting, almost rushed. Michael found a car he liked. Not too expensive. Reliable. Practical. The kind of car someone buys when starting a career. Then came the finance office. Papers appeared on the desk. Numbers were explained. Interest rates. Monthly payments. Loan terms. Everything sounded official. Professional. Routine. Linda asked one important question. What happens if Michael misses a payment? The finance manager smiled politely. Well, technically, you would be responsible, but that rarely happens. Michael nodded confidently. Everything felt normal. Safe. Routine. So Linda signed. One signature. 30 seconds. That was all it took. But legally, that signature meant something very serious. From that moment forward, Linda was responsible for the entire loan. Not partially, not temporarily, completely, but for a long time. Everything went perfectly. For nearly 2 years, Michael made every payment. On time, sometimes even early. Linda stopped worrying. Eventually, she barely thought about the loan at all. Helping her son had felt like the right decision, the responsible decision, the loving decision. But life has a way of changing plans. And 2 years later, something happened that Linda never expected. Michael lost his job. At first, he tried not to panic. He believed he would find another position quickly. He had savings. He had experience now. He had confidence. But job searches can take longer than expected. Weeks passed, then months. Savings slowly disappeared. Credit cards began filling up. Bills started piling on top of each other. And eventually, the first payment was missed. But Linda didn't know any of this, because Michael felt embarrassed, shamed. He didn't want to disappoint his mother. So he stayed quiet, and the bank began calling. The first call came on a Tuesday afternoon. And that was the moment Linda heard the words that changed everything. The loan is 3 months behind. 3 months. Late fees had been added. Interest had increased. And the representative explained something very clearly. As the cosigner, you are legally responsible for the loan. Linda hung up slowly. Her hands were shaking. Because in that moment, she realized something frightening. Helping her son had just become her financial problem, too. But the situation was about to become even worse. Because after 6 missed payments, banks take a different step. Repossession. 2 weeks later, another phone call came. This time the message was direct. If the account remains unpaid, the vehicle will be repossessed. Repossession. The word echoed in Linda's mind. If the car was taken, it would be sold at auction. And auction prices are rarely high. Sometimes the bank recovers only half the remaining balance, which means something many people don't expect. The debt doesn't disappear. The borrower still owes the rest. And legally, both borrowers are responsible. Michael and Linda. That night she barely slept. She kept replaying the moment in her mind. The dealership, the paperwork, the signature. At the time, it felt so small, so routine, just a simple act of helping her son. But legally, that signature had connected her finances to his life circumstances, his job, his income, his stability, things she could not control. The next morning, she opened her credit report, and when the page loaded, she felt her stomach drop. Her credit score had fallen. Not 10 points, not 20, 92. 30 years of careful financial behavior, damaged by one loan she wasn't even using. Within weeks, more consequences appeared. Credit card companies raised their interest rates. One card jumped from 14% to nearly 24%. Another reduced her credit limit. Banks were reacting automatically, algorithms detecting risk and adjusting instantly. Linda felt something she hadn't felt in years: financial anxiety. Not because she had been irresponsible, but because she had trusted someone she loved. Eventually, she called Michael. "Why didn't you tell me the payments were late?" There was silence on the other end of the phone. Then he admitted the truth. Bills were out of control. Savings were gone. Credit cards were maxed out. He had been trying to fix things before she noticed. But the situation had grown impossible. Linda didn't feel angry. She felt something worse: helpless. Because now she faced a painful choice: protect her credit or protect her son. And sometimes those two things are not the same. Eventually, Linda made a decision. She would begin making the payments herself. $600 per month. Money that had originally been meant for retirement. Month after month, she paid for a car she never drove, a loan she never used, a debt that technically belonged to someone else. And every payment reminded her of a difficult truth: good intentions do not protect credit scores. Stories like Linda's are surprisingly common. Millions of people co-sign loans every year. Parents helping children, grandparents helping grandchildren, friends helping friends. But many people misunderstand one critical fact. When you co-sign a loan, you are not acting as a backup. You are acting as a second borrower. And lenders treat both borrowers exactly the same. Linda eventually finished helping Michael pay off the loan. But the experience changed something inside her. Not just financially, emotionally. Because money can change family relationships in ways people never expect. Fortunately, Linda and Michael eventually repaired their relationship. They spoke honestly about what happened. Michael learned an important lesson about financial responsibility, and Linda learned something equally important: helping someone financially should never happen without understanding the full risk. Today, Linda gives the same advice to anyone considering co-signing a loan. She says 3 simple things. First, Never sign anything you cannot afford to repay yourself. Second, always read the loan agreement carefully. And third, understand something many people only learn too late. When the bank looks at the loan document, they don't see a helper. They don't see a parent. They don't see someone doing a favor. They see two names, two borrowers, two people legally responsible, and sometimes one small signature can quietly change years of financial stability.